Welcome back to Golden Roll Radio. We're watching the metals prices do what we were hoping and waiting for them to do, which is hopefully this Monday of this week, metals have bottomed. We'll find out, I think, in the next few weeks if it wants to double bottom. But boy, Monday, gold came down below 1,800 and bounced really hard. Right now, Wednesday afternoon as we're recording, gold's about 1,830, and silver has bounced nicely yesterday on Tuesday above 24 today.
Yeah, huge volatility from the Monday low. Gold since then's up 3.5%, over $62. So you're talking about that bounce off that bottom, whether or not it holds up. And then silver's up 10.5% from that Monday low of around 21.85. And interestingly enough, we called for that in the last show we did. We didn't record last week because of Thanksgiving, but the previous one where Miles put up the chart of the year, really, that we'll get to here in a second. We really felt like if we did come down and hit that gold figure, that the ratio would increase to around 82 and silver would be around 22 an ounce, and those hit as well. So pretty exciting week, really, Miles.
Yeah, it is fun when you take timing off the table and you just look at the charts and say, okay, we're just going to give the charts as much time as they need to do what we know they're going to do. So obviously it's taken a few months, and we've been on the rooftops, so to speak, since about September, October, saying this is probably going to slide, it's going to consolidate, we're probably going to have a breakdown. Because even though it felt like gold wasn't doing much, we just hadn't had that down movement. In fact, we hadn't even come to the 382 fib until a week ago. Looking back at the charts over the last couple weeks, we had this declining trend line that was kind of setting a floor in the gold price, compressing down. And last week when we broke through that and had a very immediate retest where the old floor now becomes the new ceiling, and then continued down. We had a little bit of a flat line back on a previous pricing high that dates back to like 2010, 2011. So we did stall there for a day or two, but then obviously came and broke right below that, all the way down to within a few pennies, breaking through the 50% line, which, Robert, I know you're a fan of those halfway corrections. And then, as Tori mentioned, we've had a pretty substantial bounce up. So we had trend line breaks, we had fibs hit, and we did it with RSI divergence on the downside. So to see it reverse here and come back up where we're at today on Wednesday, again at that declining trend line, which is now a ceiling, we need to see it break above if we're going to call this the market bottom. Need some confirmation going forward over the next couple weeks. Personally, I would like to see gold come back down, put in another bottom, but slightly higher than the one we did last week. Put in a slightly higher low and then come up and break above that trend line. That's going to give me the first real confirmation that was that December bottom that we've been talking about for like 6 months. It's going to be November or December. We're going to see our market bottom, and lo and behold, it very likely may have happened last week.
Yeah, we went into fundamentals last week. You got to remember, when gold and silver have years like this, you oftentimes not only see the low put in just from a seasonal standpoint, but from a profit-taking standpoint. You've got hedge funds, you got money managers, you got people that are selling assets that are at a big gain and making the portfolio look better at the end of the year. So to be expected, just that piece alone. And likewise, we oftentimes see the money move back into that same asset class right after the first of the year.
And as we talked about also for the last few months leading up this decline in the metals prices, it didn't last very long. So Monday during the day, you had the opportunity to buy below 1,800. Tuesday, not so much. Here we are above 1,800, well above 1,800. So with gold, silver correspondingly up above 24. So very short-lived when we see these declines and these bounces off these key levels. And so if we do see that double bottom, better be ready. It's probably going to be short-lived just like this one was.
Yeah, it does historically look like reversals tend to happen pretty quickly within the course of a few days, where you're going to get some confirmation probably here pretty shortly. So we're not saying this is it. We're saying we have some good arguments, I think, that are going to play out over the next week. Of course, if gold were to continue down, your next move down is the 618 fib, and that's all the way sub 1,700. So be aware, if gold were to continue down, there is still quite a bit of movement down that still keeps us in a very strong bull market. So don't forget the grand scheme of things, or don't focus in on each individual tree. Look at the whole forest, and the forest is clearly bullish.
What about silver? You seen similar bullish activity or hope there?
Silver, I'm actually a little more bullish on, believe it or not. We've been talking about how gold's kind of been leading this charge over the last couple years, and when we get to platinum, that's going to be a fun conversation today too. Silver put in the second time it's hit its short-term 618 fib, but here's the fun part, it actually put in a higher low. So we hit that 618 fib back in the middle of September. We've had sort of a slow bounce from there. We put it in again here today. Now we're still compressing down, so even though we put in a slightly higher low, we need to see silver back up 27 plus for me to start arguing breakout back up to the upside. So I'm still bearish on silver, but let's say optimistically bearish short term.
Yeah, that $2.30 move is a lot. I mean, that's a third of the way to that 27 plus figure that you're looking for. And that volatility, we saw a 5-point swing in the ratio from 76 to 81 and back down now to 75. So that's a ton of volatility, which just shows silver's telling us that inflation is an ongoing concern now. And we'll get to that here later in the show.
Sure, but let's also not forget the last time we got down to that $22 or very close to $22 price back in September, the bounce took us all the way back up to 26. So it's very likely we could go that high again and have silver just kind of continue sideways. So it is just building a sideways channel, just a pretty broad channel, a $4 or $5 swing. And these prices, you're talking a 20% move up and down. It's pretty dramatic.
Well, that's a lot of good action in the metals market, silver and gold, that we've seen here in the last 2 weeks since we last recorded the show. One of the real stories, though, is platinum, because platinum has moved, as Miles called a few weeks ago, maybe about a month ago. Miles thought platinum was going to move on its own, and boy, it sure has started. As we've seen gold and silver pulling back, as we talked about, platinum's been moving up, as we talked about. So I really like it. Platinum's above 1,000 an ounce. I think it has previous highs in between 1,030, 1,045, a lot of previous highs there. And so it does have some overhead resistance that it's coming up into right now. It's about 1,015, 1,020 as we speak here Wednesday, and looking at about 1,045 on those previous highs. Once it clears that, what's the next previous high? Around 1,200. So those are the two key numbers to be watching for platinum. But platinum has gone this move alone while gold and silver have been pulling back. So it's pretty good action to see, as Miles called about a month ago. Good time to buy platinum, and I think it still is.
Yeah, the part that I really like about the platinum chart was not just the fact that we had that breakout above the kind of rising channel that was compressing into a previous ceiling at around 940, you can see on the chart here. So, of course, right as those two indicators were meeting time-wise, that's right when we started to see the platinum breakout. But the part that I really like is we got the breakout up to around 970. Then we had the pullback, and once again, the old ceiling now becomes the new floor. So we had a rise, we had a retest, and then we had a second move up that has exceeded by about double what the initial rise was. So like Robert said, we're sitting at about 1,020. We're not too far off what was the previous high from earlier this year back in August. And once we get above those prices, I'm going to go ahead and argue that we're starting that next bull phase in platinum. That's going to give us the confirmation we absolutely need.
All right, we have to talk about the dollar.
We do.
I mean, it's even getting mainstream media attention right now, you know?
Oh, yeah.
So go ahead, King Dollar. Like this breakdown below 92, significant?
Yeah, I think it's big. I think the previous low there in 2018 around 88, but we've been watching the dollar still remain in, I would say, a bearish stance. After it failed to get above that previous high, it pushed up to about 103, and since then it's been breaking down. And I think the final break is that previous floor, the congestion zone there at the first quarter of 2018, as you'll see on the charts. Once we get below that, man, it is going to be falling in a free fall. But dollar has definitely broken down and hasn't really corresponded with the gold price and silver prices moving up just yet, but I think it's bound to.
Sure, or an equity market move up, which
Sure.
is stalled. So, yeah, I agree with you, Robert. I think we're going to probably see some price action between that 88 bottom and around 90, which is where we had the breakout back in 2018 and it started to rise again. But like you said, it rose for the next year and a half, and it never put in new highs. In fact, came rather short. So dead cat bounce, perhaps?
Yeah, and I think that's significant. Even with the COVID news that flight to safety, at least temporarily, during COVID happening in March, the shutdowns, it pushed up toward that previous high, but it just couldn't get past it. So I think that's going to be significant in a long-term charting perspective to see that failure for the dollar to go above the previous high and fail around 103. And then since then, we've been coming down, going lower.
It
What do you think,
shocks me
Troy?
how quickly it went from 92 to 91. That's a very bearish indicator for me, too. And I'll tell you this, too. We've been waiting and watching for the sub-90 mark, and I think we're really close, and this might be the time. If we close the year out at sub-90, we finally get into the 80s on the dollar index like we've been calling for. And then, in my opinion, we quickly will be seeing gold above 1900 again. That move down will correspond to a proportional gold move up per your bullish charting there. And it doesn't have to take off and run forever, but just keep in mind, gold is a hedge on the currency, on the US dollar, especially right now, the way we measure it. And there's a lot of bearish dollar talk out there right now, both from the central bank and from the Treasury Secretary. So both Powell and Mnuchin this week are talking about more stimulus. Powell's saying that the recovery is going to stall out without more fiscal help. Mnuchin's saying we need to support and have a targeted fiscal response. So they're both at the podium crying for it. That's helping drive the dollar down. And ironically, they're talking about this inequality. This is now rising to the top where there's the rich getting richer, the dissolution of the middle class, and the poor getting poorer. And that's really what you're starting to see. Well, of course that's going to happen. That's what's been going on since the shutdowns originated in the spring. And let me just remind you, 30 ounces of gold owned puts you in the top 1% in the world of gold ownership. And so if you want to break out into the top 1%, it only takes 30 ounces of gold right now to hedge your portfolio appropriately, because we are seeing the dissolution of the middle class right now with these economic policies.
So with this massive drop in the dollar here over the last week, we'll turn our sights over to where that money probably went to, the equities market, except the equities market hasn't really done anything. So obviously we're seeing that currency move into other markets, probably offshore to some extent, and there may just be some losses taken in the futures options contract market as well.
The Dow Jones Industrial Average, though, did have its best November since 1987. So we say it's done nothing. I mean, it really hasn't. I mean, we crossed the 30,000 barrier, and it's been flat, is what you're alluding to
Right.
from the last
Yeah,
recording.
I mean specifically over the last week or so.
But it's amazing. I mean, look at what the dollar's doing, and look at what the economy's doing. And despite all that, you've got a record Dow Jones, up almost 12% in the month of November. And that's incredible, but it just goes to show it's just not Main Street, and it really is, again, the biggest corporations getting even bigger, while small businesses are failing across the United States, and Main Street USA is getting decimated.
So, Tori, that may make sense, being that they're able to, by devaluing the U.S. currency, keep the equities market afloat, as the equities market tends to lean more towards those larger companies and not Main Street America, where most of us actually work. So we do encourage you to go back to last week's episode. There at the end, Tori ran through some pretty strong fundamentals that I thought was worth looking at, because he takes the time to go through both reasons why gold should go up as well as reasons why gold could go down. And it's important to look at both sides of the argument so that you can make the most educated choice with your funds going forward that you can. So on that, we appreciate you stopping by this week. We hope you all had a wonderful Thanksgiving last week. If you liked what you heard, hit the subscribe button, ring the bell, head on over to our website, McElvaney.com. You can find us on Twitter at ICA Gold or Facebook at McElvaney Financial. And if you would like to discuss your personal portfolio with one of the advisors here at McElvaney ICA, feel free to give us a call anytime at 1-800-525-9556.
Thanks for listening. Have a great week.